Hello, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 21st, 2015. Well, this week we witnessed a strong selling pressure and a definite range break for S&P 500, which took S&P 500 back to February lows. And we will take a balance of evidence approach and try to determine the current market stance, whether it's bullish or bearish. Bonds unsurprisingly gained as money rotated to safety. Gold continued its oversold bounce, while oil moved to new lows and briefly touched below $40 per barrel. And we'll also look at XLE and the dangers of picking bottoms. Alright, so let's look at charts. This is a chart of S&P 500, 6-month chart. So the dominant feature of this chart, of course, are the Thursday and Friday action. And this is a very interesting and unusual candlesticks. So you can see here on Thursday, the prices opened here and closed here, but you can see that there are no tails out of the top or of the bottom. What this means is the prices opened, and throughout the day, the sellers dominated. Non-stop selling took place throughout the day. In other words, there was not a single attempt at a rally throughout the day. And the prices closed at the bottom of the range. In other words, it actually closed at the bottom. So low and close were the same, and high and open were the same. This candlestick is called the Marubozu candlesticks, and it's just the Japanese name that they give it. What's unusual is that we had two of them in a row. So the same thing happened here on Friday, and you can see open 2034.08, high 2034.08, and close and low are the same. What this means is, once again, is that the sellers dominated the action throughout the day, and there were no buyers to speak of, really. This is a strong, significant selling pressure. So, market breadth, this is intermediate market breadth indicator, sort of. So you can see advanced decline line on Friday broke down as it's 28.45. It broke below this low here. So advanced decline line is confirming the this decline. In other words, this decline is broad, and all sectors are and the majority of stocks are participating in this decline. And also high volume. You can see the unbalanced volume indicator broke below its recent lows and closed at a new low for the move. Now, we are oversold since we're still considering, since I still consider S&P 500 in a bull market, in a bull uptrend. Now, next few charts, we will examine whether or not this bullish uptrend is coming into question. And so let's look at the next chart. The next chart simply shows a longer term picture of the S&P 500. And this trading range that we had from February until basically now was clearly broken with a decline on Thursday, followed by a confirmation on Friday. So this trading range going back to February really couldn't be broke. Neither the bulls nor the bears could dominate here. And actually, my posture was still bullish, and it was still bullish up until Tuesday. Pretty bullish. But this inability on let me see, this is Wednesday. On Wednesday, inability to follow through on this rally, because I thought this was a hammer candlestick, very strong looking buying pressure, and then pushed higher, but it didn't happen. So it looked like investors were starting to get scared as early as Wednesday, and then I meant Tuesday, and then Wednesday already there were signs of pretty significant selling pressure. Thursday obviously was pretty bad, and Friday was even worse. So um, I was already getting a little worried here on Tuesday, and basically this inability to follow through is what worried me. But let's look also at the market breadth indicator. So this is a percentage of stocks above a certain moving average. Like this is a 20-day moving average, 50-day moving average, and a 200-day moving average. So the 20-day moving average is really volatile, and it's more. I use it more to see if it's a short-term overbought condition or oversold condition. In an uptrend, of course, we're looking for short-term oversold conditions so that we can time our entries, and this actually worked really well. You can see when the 20-day moving average became oversold, we had a rallies usually, and here as well. But now we're also oversold, so we'll see if we actually are going to get a rally or not. Now, this is intermediate. The 50-day moving average is also pretty volatile. So this reading of 16 means that only 16% of stocks within the S&P 500 are above the 50-day moving average. That's pretty low, and you can see here back in October it dipped. I think this is a single digits. So we're getting there. We're getting there already. So we're pretty oversold on the 50-day moving average. And now, as far as the 200-day moving average, the percentage of stocks above the 200-day moving average, we dipped in October below the 40 very briefly and then rallied right back up. So as long as this average continued to stay above 60, I consider this to be in a bull market. Now we're very close to a bearish crossover. We're at 40.4. So we haven't gotten there yet, but I suspect if there's any more weakness, we'll cross over to the downside. And then finally, here is a bullish percent index. Bullish percent index measures the number of stocks within the index on the point and figure chart buy signal. And you can look up the point and figure charts. They're kind of interesting there. They look like a series of X's and O's. To have a buy signal on point and figure chart, it takes quite a lot of price movement to generate a buy or a sell signal. So in other words, right now there are 44% of the index on a buy point and figure chart. So this is, in my opinion, still in a bullish territory. Anything over 40 I consider in a bullish territory. So we're still in a bullish territory for the S&P 500. So we'll look at a balance of evidence approach. We'll take a balance of evidence approach to determine whether or not a general market is in a bullish or a bearish trend. So let's look at a very broad measure of the market is a New York Stock Composite Index. So this is even broader than the S&P 500. It has more stocks in it. First thing is this blue line is now below this red line. This is a 50-day moving average crossed over below the 200-day moving average. So this is considered a death cross, and this is generally speaking a bearish omen. New York Stock Exchange advanced decline line, New York Stock Exchange advanced decline volume line. They're all now in the bearish territories. Percentage of stocks, new highs, new lows, started being in the bearish territory a while back and continued in the bearish territory, and the new lows rather are expanding still. And then percentage of stocks above the 200-day moving average, just like I mentioned in the other one, in the previous chart for the S&P 500, also dipped below 40%. And now, again, today it closed at 31%. So only 30% of stocks within the big board index are on a above the 200-day moving average. The only thing that I see positive about this chart is the bullish percent index for the New York Stock Exchange composite is still above 40. So that's one of the things I see that's still positive about this chart. If this was already negative, I would be outright bearish on New York Stock Exchange composite, but I'm still somewhat very mildly bullish, I guess you can say that. Now let's look at the same chart for the um, NASDAQ 100 ET. I meant to say NASDAQ Composite Index. So this is all of the stocks within that are traded on the NASDAQ Stock Exchange. You can see that this is a stronger chart. The 50-day moving average is still way above the 200-day moving average. So this is a positive right here. Other than that, similar thing, the advanced decline line, advanced decline volume line, percentages, new highs, new lows indicator, and the percentage of stocks above the 200-day moving average are also in the bearish territories. And as before for New York Stock Exchange, the same thing. We have bullish percent index for the Nasdaq exchange is still above 40. So right now, what I'm seeing is I have 3 bullish parameters out of the 1, 2, 3, 4, 5. So out of 12, you can say. So we have the 50-day moving average is above the 200 for Nasdaq, and we have 2 of the bullish percent indices still in the bullish territory. Now, if you ask me, that's not a lot, but it's still somewhat bullish. If the bullish percent index drops below 40, I will change my posture. Even though here you can see that the averages are still above one another, moving average still 50 is still above 200. I think the market breadth is painting a bearish picture. For now, it is still, in my opinion, slightly bullish. So I'm probably going to be looking for a re-entry on the long side unless we see further deterioration in the market breadth. And if we see any more downside, I think we will get there. All right, let's look at slightly more positive, and that's bonds. Bonds certainly had a decent week, and this is about 2% gain here. Actually, last week I mentioned that this was kind of like a bearish engulfing, and then we kind of moved a little bit lower, but I think it was a temporary blip, and I think at this point of the game, the trend for TLT is up. TLT is now in the top, I think, 1% of ETFs, so it's once again a market leader. Even though you can see that the 50-day moving average is now still below the 200-day moving average. So this bullish and bearish crossovers, they don't always work, obviously. Unbalanced volume is confirming this breakout as well. So the higher prices are being supported by good volume, and this support obviously held. All right, let's next move to gold. Gold spot price daily chart. So pretty impressive rally here, pretty much non-stop pushing higher. Here at the 1160 area, gold ran into resistance from this broken support, and this is kind of like an obvious resistance level, and after such a pretty dramatic run up, traders are taking profits here, which makes sense. Now, gold is still bearish, contrary to what many people are, what many gold bulls are saying. I still consider this rally that started in beginning of August to be a bear market rally. You can see MACD is already in overbought territory, so I will be looking for shorting opportunities already, and I think people are already starting to sell their lock in their gains, possibly take short positions already. I I think there's still some upside left and some upside momentum left to this particular move. So I'm not yet comfortable shorting just yet, but we're certainly getting into this overbought territory. Since this is a bearish security, I'm looking for overbought conditions, and that's where I would like to go short. Okay, next is a GDX, gold miners ETF. Now, this one is very interesting because even though gold miners are pretty much obviously very strongly tied to the price of gold, here you can see the big red candlestick, which is completely engulfing yesterday's candlestick from Thursday. So this is a outside possible, I want to say possible outside reversal, bearish engulfing pattern. Now, if this is going to be considered a outside reversal, bearish engulfing, then we need to see more downside confirmation shortly. Hasn't happened yet. Plus, this is a very volatile ETF, so it's kind of difficult to say if this bearish engulfing is indeed going to work out. Like it was something similar back here, a bearish engulfing right there. It continued down, but then it found support and then rallied further. So once again, I'm not yet comfortable going short on GDX because I think we may still see a rally to the 1729, area from this broken support. So that's another maybe $1 or so up. And as far as market breadth, I mentioned this bullish percent index. We had basically at zero. We had no stocks on the bullish percent index, on the point of figure buy charts at all. So then we started seeing this bump here, and I think that's where I thought that the rally is indeed beginning, and it started here. So I think GDX, unless we once again we collapse from here, I think we may still see some upside, possibly 1750, maybe even higher, maybe to the 200-day moving average as well. But if you look at MACD, this MACD indicator, it's still in negative territory. So I would like to see MACD in the positive territory before I go short. So like you can see here, MACD was in a positive territory, and this was just a perfect shorting opportunity. And we're not there yet. So I would like to see MACD in the positive territory first before I consider shorting this. Okay, next is oil. So I thought oil was going to rebound, and I put a trailing stop on my open position in short in SCO, short crude oil, and I actually got closed out, and I think I got closed out right here, and then we got this drop again. So it's kind of difficult to pick bottoms, obviously, but this is a multi-year low, and today we actually dipped below $40. So it's at 30. It was at 39.86. Very steep, significant sell-off. Oversold, sure, it's oversold, but in a downtrending security like this bearish, this is a bearish security. You can see the 200-day is above the 50-day. It's one of the easiest way to identify if it's a longer short, and it's definitely oversold. But once again, in an oversold security, in a bearish security, oversold readings are generally speaking ignored, and then overbought readings are shorted. Where would oil go? No idea. It could continue dropping more. Right now it's supply and demand, and obviously there is a lot of supply on the market. And then I wanted to highlight XLE, the energy ETF, and when I got closed out of my position in oil right here, in short position in oil. I thought that we're actually going to get a rebound rally, and it looked like it. We had a nice, series of nice bullish candles. But most importantly, I thought that, oh, okay, looks like we're getting a breadth momentum signal right here, a MACD crossover signal right here. But even more importantly, I think we had a bullish percent index starting to rally right there. So I actually wrote here, look, a bottom picking alert. So if those traders that like to pick bottoms and try to get into try to find a bottom in a downtrending security, many probably start looking for a entry opportunity here. But look what happened. Basically, it immediately failed. So there was no confirmation in oil, and this is a energy ETF. It's kind of like gold and gold miners. We have the commodity, and we have the miners that mine that commodity. And the same thing for oil is that we have oil and we have energy producers which mine that commodity. There was no confirmation. Let me just go back to the oil chart. There was no confirmation. There was no rebound, and this rebound in XLE was purely. I'm not exactly sure why it happened, but it did happen. But in any case, obviously collapsed back down, and this is again a multi-year lows. Confirmed by market breadth. In other words, this is a decline is broad still. And then lots of new lows. 42% of the ETF XLE registered a new low. So it's a still firmly in a bear market. A rebound to possibly $72 would be a nice opportunity to go short. Okay, let me just quickly let you know how to find us on the internet. Please go to MasterChartsTrading.com. We have a trade alert services that we're hoping to start within the next 2 months or so. So October 1st is at the latest. So please subscribe to our mailing list, and you will be the first on the list to receive a discounted alert price, stock alert price. Also, we have a blog where this information will be posted. If you go to public charts and social page, you can see that we have a link here to the public chart page, and this is where we post most of the charts that we mentioned in the videos. If you have Twitter, Facebook, YouTube, or StockTwits accounts, please follow us there as well. That's it for this week's market recap. Thanks for watching and have another great trading week. Bye bye.